In the 1990s, it was the four horsemen who led the markets. There they are, Microsoft, Cisco, Oracle, Intel. In the mid-2000s, the move to global growth. The BRICS, for example, Brazil, Russia, India, and China. Then the FANG stocks, of course, or some variation of FANG. There they are. Most recently, the Magnificent Seven, the mega-cap tech stocks that have driven so much of that rally this year. Deirdre Bosa is digging into that leadership for today's Tech Check. Dee.
Just so much of it, right, David? That tech leadership has expanded, and those seven stocks, because of their performance and market caps, have essentially made up all of the gains in the S&P this year. Most of our audience knows that. But what about the next seven? Looking at the next largest tech companies in the benchmark S&P, you can see that the market rally this year has been narrow, yes, but it's not just all NVIDIA, Meta, Tesla, and the trillion-dollar darlings. The next biggest tech companies by market cap, they're chipmakers, Broadcom and AMD, legacy players, Oracle, Cisco, consumer names, Adobe and Netflix. What they all have in common, they're up more than 50% this year, except for Cisco, and they're all riding the AI hype cycle. AMD, Broadcom, they're up 90 and nearly 60% respectively this year. After NVIDIA, which of course is in a class of its own, they are seen as the next chip winners at this early stage of generative AI, the picks and shovels, if you will, of that platform shift. There's also Salesforce, Oracle, and Cisco, enterprise tech names that have pivoted towards AI and are seeing renewed investor interest. Let's take Salesforce. It has given its slew of activists reason to cheer and maybe back off even, climbing 60% this year, in part thanks to its dedicated generative AI service called Einstein. Then there's Oracle. It's turned itself into a serious cloud player, and now it's announcing that it will be adding generative AI features across its software lineup. Cisco, another legacy name, also launching AI features across product lines. And investors have responded by pushing its market cap above $200 billion this year. Rounding out the next seven are consumer-facing names Adobe and Netflix. Adobe on its earnings call last night made the case to, quote, lead a new era of generative AI. Today it's already adding to huge gains of 50% this year. There is, guys, of course, however, a huge caveat to all of this. The group, much like the original seven, largely still unproven in terms of actually monetizing the hype. Aside from NVIDIA, none of these companies that are being boosted by the promise of this platform shift are clearly backing it up with hard revenue and profit, except for NVIDIA, of course. So there's always the chance that a number of them fizzle and take the broader market with them. So whether you want to look at 7 names or 14 guys, it's tech leading this market still, and on the promise of this generative AI shift.
There's so much focus, Dee, on the addition of market cap thanks to that AI hype. And I think not a lot of focus on who loses the market cap because of the AI hype. On Oracle's call, we heard clearly them talk about customers continuing to spend on AI, but being more rational in their spend overall, so therefore cutting back in other areas. Do you get a sense of what are those areas that they would be cutting back on, sacrificing on in order to spend on AI?
Yeah, it's a good question. We talked so much about the winners, but what about the losers and the business models that are going to be eviscerated? Maybe some of the legacy tech companies that we haven't mentioned that are not able to pivot or transition enough. Entire industries, too. Remember Chegg? I think that was a month or so ago, but its stock just plummeted on the idea that generative AI is going to decimate that business. There's also the advertising tech companies. And the middlemen in the advertising space, are they needed as much? So, Melissa, that's a good idea. Next time, we're going to look at the losers.
Look forward to it in the next Tech Check.